We slave for you, so you won't have to. So please, leave everything you're doing and pay attention.
What's happening, guys? So this is your boy Futi from the FX Slaves. I'm here with another banger analysis. So I'll be breaking down the trade we took this week, and I also think this will reveal a lot of nuggets, guys. So let's waste no time. Let's get into it. Okay, guys. Let's start with the screenshot we took on Sunday, 13/21, 2021. You can go and backtest. So, guys, our thinking process as FX slaves was that we were making or having consistent lower lows and lower highs, which represents the bearish market. But on higher time frame, we were clearly bullish. So we knew very well that we were trading the counter trend to complete the complex pullback, and then we can go for longs or buys only if the market or the structure confirms. So yeah, let's get into a real chart right now. Okay, guys, as I said, the higher time frame was clearly bullish. It was bullish, making higher highs and higher lows. So, and then the markets broke what the previous what structure. So if the market broke the previous structure, we're expecting a pullback and then a move down to our FU candle to take this market to go up again. So that didn't happen, but we managed to get in the sell. So let me explain. Okay, shifting to smaller time frame, we broke the significant lower high, and then we created an impulsive move. So our job right now is to break down this impulsive move and see the unmitigated zone where the market has chances to react to. Always look for as FX slaves is liquidity. Liquidity means the money of retail traders or dumb money. I'll do another video for liquidity, but to summarize it, liquidity is found below or above your M's and M formation. Let me show you just a bit. The money is sitting below, below here and above here. Why? Because a lot of traders are buying here, and a lot of retail traders are selling right over here. So their stop loss are over here, over down here. So the markets usually go down and take those and then go aggressively. So let me show you in the real chart. So we're breaking down this impulsive move, remember? So now we're going to look for unmitigated zone and liquidity so we can have the aggressive going down, because we know that we must complete the complex pullback, because this all is the complex pullback to go down to our lower. So we're breaking down right now. We're checking the unmitigated zones. So let's get to it. So just check right over here. This zone was mitigated. Even we didn't even broke the structure before it was mitigated. So this one is filled. Why? Because the market came back to test it and then went down to break the previous lows. So this one is mitigated. It doesn't have to come here and then go down. So another thing I was explaining, can you see this? This is a M formation where the market introduce the early sellers in the market and then create a resistance right over here and give the fake signal, and then it must come back to take out those early sellers, and then it will test in a correct zone or IFC. But if you go to smaller time frame, you can see clearly the zone. So yeah, and then the market came back down to test here, and then went to mitigate, and then went down to create a lower low, and then went back up to create same thing like this one, same thing, introduce the early sellers, and then they were in and then go back up. But notice this, it didn't mitigate or fill this order block or IFC or whatever you can call it. So if it didn't mitigate it, it means this zone has to be has or must be mitigated before going down, because every time if we're going lower, we have to manipulate or mitigate the highs before going down, because we need the momentum before going down. But clearly, just look structure wise. Structure wise, making we were making this is a lower high, lower low, lower high, and then lower low. So we need markets to go up and create what, a lower low, a lower high, so that we can go down. So our thinking process, like behind this was very, very, very obvious, because we created a lot of, or we introduced uh, lot of early sellers right over here, and then we manipulated the high, and then we touched to our unfilled point of interest, and then we went down to our point of interest, and then our target was very, very far, but this trade was successfully, we went aggressively. So yeah, another video I'll be explaining about imbalances, so please guys subscribe and like the video. Also comment and tell me what should I do, like what should I break down more, so you can understand, because we're trying to make traders who are struggling so that they can become better traders.